Hi, I'm Stacy Pingree, and welcome to the Legacy Wealth Podcast. I'm the founder of Radiant Financial Group and this fantastic podcast where we talk about legacy wealth and by design, right? So, as many of you know, if you've tuned in, we talk a lot about legacy wealth being more than just what you leave behind. It's what you do with what you have here, what you leave within people. And today I have a really great guest. Her name is Jasmine Dolan. She actually is going to help us learn and understand more about. Well, here's a great hook, right? Is what if your real estate portfolio could grow faster without you pouring a bunch of more money into it, right? So
absolutely.
we're gonna talk about 1031 exchange.
I know, the sexiest thing to do on the planet. I love it.
I thought we have to have a really good hook to just get them hooked in, right?
So I mean, taxes are not sexy, but if you can tell anyone that they can avoid paying taxes, they become instantly hooked.
I might be in love with you with that. Yeah, exactly. No, yeah, exactly. So it does. That is the appeal. So welcome. So thank you.
Thank you.
Yes,
I appreciate it.
I was really excited to have you as a guest because I know this has been such a great strategy and tool for so many clients that we have, so many agents, investors, and ourselves. We've used it many times. So I'd love for you to just give a little background about who you are and how you got into 1031 exchange, the business with First American. And
Absolutely. Yeah. So again, my name is Jasmine Dolan. So I as we were speaking, I got into the business through family, the legacy aspect. So I was raised in this industry. Really, my mom worked for First American for close to 18 years in the title side. And then, working with family is always a little skeptical. So it took me some time, but I finally made that step because I do have a passion for it. Yeah. And a big part of why I went from title to the 1031 side was because of the legacy aspect, the generational wealth aspect. So my family moved here from Central America. Okay. I'm first generation American. I don't look like it. I don't tan very well. But for me, the thought of being able to educate, just an investor with just one rental property or a large investor and assist them with, diversifying that portfolio was really exciting, right? Because even with this part of the industry, I learned something new every single day. 1031 doesn't change, right? It's federal law. What they say is what we're going to follow. But how you can really work with clients on creating, that next structure or that plan, because that's not a quick transaction. Kind of, how people think that, I'm going to sell my house and it's all going to be done in 1 month. Great, that can happen. But on average, most of my clients called me within about 6 months before, we're even putting the property on the market or before we're really moving in with a contract. So a 1031 exchange, what it specifically is a program, right, in the tax code that the IRS has, Section 1031, that allows investors, so anyone that has a property that is a non-primary residence properties, it could be house for Airbnb or rental, it could be land, commercial, different types of things like that. But when they're looking to sell this property, instead of paying what's called the capital gains taxes, you are able to defer all of that to reinvest into a new property. The reason this program exists and it's so important specifically for investors is if, think of the commercial world. If you told an investor that's selling multi-million dollars that they have to also start paying many millions in taxes, then they're going to say, well, why are we selling it, right? Yeah. So this helps those key large investors and even just the small ones continuously move that cycle through, right? So it's setting yourself up because, you may have one property and you may do whatever you can to rent it out, things like that, but then what? Right? There's always that of, okay, but then what, right? You can't just stop yourself there. And then it's also great for, once you begin this cycle, it's not a one-time or a two-time thing. This is something you're going to do for the long run to leave for your kids or your family or whomever's going to inherit, what you're ready to leave for them. And you're doing it in a way that is going to help them, set them up, right? So for me, because I'm first generation and I came from a family that really had to work their butt off, to get out of a 1-bedroom apartment with 5 kids. And now they're very successful in many different lanes of life. It's exciting because I also get to teach my own family, how do we utilize this and, teach my husband, okay, we're going to rent this out, but this is what we're doing. And unless you're in the industry or kind of talk to someone about it, you're not going to understand or know anything about it.
Yeah. Wow. Well, first of all, wow. What a amazing explanation because I didn't even want to interrupt because whoever's going to get that clip right there is just a great introduction to what 1031 is and a great explanation. You did a fabulous job of that. Thank you.
Of course, thank you. Yes.
But I didn't even know about the first generation, moving here, which just adds to my whole point that, look at how it works, right? I mean, here you guys are. Working with a professional. This is one area where you really have to work with a professional. You have to work with an exchange company, right? An exchange professional, at least.
Yeah. So, just for example, like in real estate, you can technically sell your home without, hiring a real estate agent.
Yep.
Is it recommended? No.
Yeah.
Right? There's always, you hire an expert any field because they're the expert to make sure that things go according to plan and nothing gets left.
But I think especially when you're dealing with the federal government.
Especially. In Arizona, there technically is not a requirement for what we're called as a qualified intermediary, a QI, to be insured.
Oh, I didn't realize that.
So technically, attorneys or some different types of firms can hold your funds technically. Now, this is what I always tell clients, you're going to go with whomever, because obviously everyone has different fees or different things they offer, which is great. You have to do what's best for yourself.
Yep.
But what happens if the world collapses?
Yep.
What happens if Silicon Valley Bank, which no one ever thought would go under, closed and everyone's money was just where, right? We had tens of millions of dollars of clients' funds there.
Wow.
Aside from, yes, obviously, most companies have insurance. We made all of our clients whole. Yeah. So no client lost a single dollar. When you're looking to work with a qualified intermediary, you need to look past the price or, what the company is offering you and really ask, how are your funds secured? Are they backed by any bonds, right? Are they pooled together? Or do each clients have their own separate account? Yeah. Because unfortunately, just as is in every field, right? There's a couple bad eggs. Yep. And I've gotten those phone calls and it's terrible because we all follow the same guidelines, right? We don't share a system. No one can see each other's information. Yep. So if your company, your QI, your qualified intermediary goes under or stops answering the phone, there's no way to get your money back.
What's the recourse? Yeah. Right. What's the recourse? There maybe not. There maybe isn't. That's really great information. And that's why First American, such a trusted, I've used for title for years and also for our 1031 business. And, I think you started, you laid this out that it's a great way to move up into your property. So, if you even if you have a buy and hold strategy, even for us, it was like, okay, well, if you have several residential properties and you're like, listen, I'm tired of like this many tenants. Yes. I've got 5 tenants because I got 5 houses. I think I just want to roll all these together into one commercial. I'm going to do one commercial property with one big tenant, whatever it looks like. But it does give you an opportunity to move up and to simplify, even maybe better focus your investing into what maybe fits you as your life changes or grows, right?
And it is expand. As you get more properties, it is more work, and unless you have the time for that, it's a lot of work.
It's another job.
Yeah. Right. Or you have to hire someone. So then you have to calculate those funds into, really what you're making also, and it's great for, getting larger projects or diversifying in the sense that you don't have to, there's a term called like kind that goes with 1031, which people get stuck on and they think, okay, if I sell a home, I have to purchase another home. If I sell land, I have to get land. That's not true. Like kind, what that means is that as long as you're purchasing in the real estate realm, it's considered valid, even something that's not a physical structure. So there's things called Delaware statutory trusts. There's things called REITs. There's things called tenant in commons. So if your client, for example, I talk to my clients and I always bring in their financial advisor, CPA, or attorney that helps with their financials. Mm-hmm. And we talk about that end game because that's really what matters. Yep. And if the end game is clients looking to slow down or they're not really wanting to be as hands-on, then they need to look at these portfolios that are not a day-to-day and you're receiving the income, right? But your funds still qualify for a 1031 exchange. Okay. So there's always options to have that conversation. I tell every single client, it's always worth a conversation. The worst thing I can say is not right now, but now we know how to set it up for next time. Yeah. Which is very common, especially in Arizona with so many snowbirds.
Yeah. That was another great point. You're bringing up, you're kind of leading me right into these things here. The timing, when do they call you? Because let's talk about timing around the whole thing. Because I think let's dig in a little bit more to what it really means. we talked through like repositioning, repositioning your investment strategy. What are the timelines required? When should they contact you? And then what's the deal with like the two numbers we need to know?
You need to contact any qualified intermediary before you sign any closing documents, even if it's the day before, right? Let's say your title company didn't tell you, or you just found out, whatever the situation is, right? You call and get a qualified intermediary immediately. If your signing documents with title are signed and recorded, there's no going back.
Okay.
The IRS does not care even if they haven't recorded them. If they're signed, you're done.
It's a done deal. Yeah, too late.
So that is the most important thing, because that's been a big downfall for a lot of people, is they like, oh, I just closed last week. Can we just, do it really fast? No, that's the most important thing, is always do that. And then yes, there is a timeline that goes when entering into the 1031 process. There's, a lot of misconceptions because of AI now. I think people don't realize that as you speak to your AI or ask the questions, it learns to answer the way that you want to hear the answers, right? So even some of that
a good
information,
little assistant. It's
right. It's good, but let's fact check a lot, because the timeline, there's certain specific number of days, and they're calendar days. They don't care if it's Hanukkah, Christmas, your birthday, or Sunday. They're gonna call you. It's the IRS, right?
Yep.
So being very aware of that and finding someone that makes you feel comfortable understanding what's ahead of you. But most clients call me within a few months almost, just because we're starting to plan out how to do this or what they have questions on. A lot of times, you work with escrow officers that I work very closely with.
Yep.
They will connect me with their client that's already in escrow. And so I call them immediately, right? So it's having good relationships to have that good communication.
Yeah. And having, exactly. People that you trust, you can ask the questions of. What, as far as the two deadlines that for timing and everything, so you've got to start searching for a property. You've got to have a property identified. I'll let you tell.
Yes. So the main one is, everyone gets confused. There's 180 days that begin the day after you close. Those 180 days gives you the opportunity to close on any property or properties that you're going to purchase. Within the first 45 days, though, are the most important. This is where a lot of people can make a lot of mistakes. The 45 days is called the identification period. So during this time, the IRS allows you a couple different options on identification, meaning they want you to acknowledge specific properties or property types that you're going to reinvest in. You don't have to be in escrow. You don't have to put a contract in. It's literally as simple as either address and percentage of ownership, or if it's a larger portfolio, that and percentage of ownership, right? Okay. That is the biggest mistake people make, because when I tell my clients, right, there's one option where you can identify up to 3 replacement properties or up to 200% of the value from which you're selling, which are the two most common. There's a third option, but it's very rare and it's a very specific circumstance.
Okay.
But those two, I tell clients, always identify more than you're going to buy.
Yep.
Always. Because if for any reason, inspections, contracts, something goes crazy, right, during the process, you have another option, because come day 46, whatever is on that document, the IRS does not allow any changes. It is written in stone. So that 45 days, I tell clients, even before they close escrow on their property,
figure out
start shopping.
Yeah.
Start looking. You can even put an offer in it. We don't care. As long as your new, we call it the replacement property, closes after your original property, the relinquished property, that's fine.
That's fine. Okay.
You can be in escrow at the same time. That's totally fine. You don't have to wait until you're past your date. You can begin early to give yourself that time.
Yeah, that makes sense. I mean, and I would think, when I'm working with people from, a partnership perspective here too, if somebody tells me, hey, I'm going to just sell this rental property, I just don't want to own anything in Idaho anymore, then and I'm looking to move it to Arizona, and I've got one right now moving something from California to here. And I've had one going from Arizona to California, right?
Yep.
And I'm like, if we're gonna do, I just closed one about a month ago, moving to California, and he brought cash in. It doesn't all have to be the 1031. He brought cash in with the 1031 exchange money, so he had $500,000 coming off a property that he sold. He then brought the rest, and he bought 1.7 or something. So we did a loan.
Right.
We did 1031, and he brought extra cash.
Yeah.
So it really was very flexible, but he had been shopping before he even put his property for sale.
Yep.
He'd already identified what he wanted, so that there wasn't any hiccup there in that 45 days.
Yeah. And that's the best way to do it, because 45 days goes so quickly.
Yep.
You get busy with work or life or, God forbid you have children and the weekends, they're not yours. Like there's so many sports and activities. So like you need to, just as you would with fixing up your house or whatever, you need to have that plan ahead of time. And if you don't know who to call, ask your realtor, your escrow officer, your lender, whomever you're working with typically has someone that they like, or they'll recommend companies, right? And then you do your homework to find what's going to be best for you.
I love that.
But no, that it's always great to start ahead of time. And especially with moving states, we have so many people from California or, other states that are finagling.
I think that's it. I think not lining it up. I think obviously calling the team and not lining up those things ahead of time. Don't get anxious to get your house listed, and especially if it's an investment property. That's don't get too super anxious until you're ready. Until you're really ready. You really got something lined up. So as far as like you working with people on like their, like you really said, you do a lot with even attorneys, and you're working with even financial planners sometimes too.
Yes. So if a client is, a smaller investor, what I call more of like, and we have a lot of those here, right? Arizona is a huge vacation spot, a huge snowbird spot. If they only have one or two, I always ask, who helps with your taxes at the end of the year? And they usually have an accountant they speak to once a month or a year or whatever. And that's fine. I just say, please let them know that this is something you're going to do so that they can also prepare. And we give them the documents they need for that, but it's good to let them know ahead of time. Right? No tax specialist wants to change anything last minute during tax season.
No, exactly.
But on average, one of the first things I do is I ask them, who is your financial advisor, your CPA or attorney? Who is a key part of those financials every year? Because I can almost guarantee that you probably don't know all the details of your own financial structure. And that's okay. You hired the expert. That's fine. But there's moments that their clients will ask us questions and we don't know that, right? Because we're a very neutral party. We don't keep track of your tax filings. We don't know what bracket you're in. We don't know your capital gains percentage. Because every client is in a very different state of financial life. So by bringing them in, I'm able to really kind of avoid a lot of the questions that happened maybe on the back end of the process, because we've already worked out all the kinks. That financial advisors ask me questions if they maybe don't understand, because that's also happens, right? It's like hiring an attorney. You're not going to hire a tax attorney to help you with a legal case.
With a criminal case.
Criminal case, yes. You're going to hire a specific one. Same with real estate. Right? So you need to find the specialists in your field, and then we all work together to avoid mistakes.
I love that. And I've seen it where, I mean, when we're very often working with a CPA and a financial advisor as well on the lending side to make sure that, like, is this the year for the 1031? So a great example of that would be, and something I put out there to our listeners to think about is, if you're taking an operating loss on a company because it did have one, or you've already got maybe a bonus depreciation that you're using this year, and you don't need the 1031 this year, or maybe this is the year to actually sell the property and you don't want to roll it forward for whatever reason, then look at that, let's look at that combination of things together, those taxable events together. But I've had people that have called and I'm like, no, push it to next year when you can do this or do that, and so anyway, and I think most CPAs are in a, at least the ones I've worked with, are a lot of are in the time, like, just push the problem forward. And there's a lot of sense to that, though. It's like,
there is.
Wait until we have an event or something, or you're not in those high earning years, or your investing strategy's changed, and so you can do something different. So I just think timing it's like really getting the advice. I think the big takeaway here is like really getting the advice on from all these experts and how we all work together. I don't know that people would understand how tightly we work together when we're doing a transaction, but the 1031 and the lender are tied together the entire way.
I talk to lenders so often. And it's funny because they're always asked, like, why do you need to talk to them? I'm like, I honestly, if you're not comfortable, that's fine. But I'm going to ask that even in an email, we include them so that I can, because we put everything in notes, right? Let's be honest. When it comes to taxes, everyone wants to get mad at some point over something, and it's somehow our fault. And I say, I'm sorry. Like, unfortunately, one, we can't even help with that. We don't do your taxes. But it's good to have everyone working together. And specifically, like you said, I have clients the same thing. I tell them, do you have any losses this year? What's going on with these other things that I know you have going on? And it helps because I could take your fee and I could get paid off your deal, great, but then you're not going to be my long-term client. You're not going to continuously want to work with me and build that portfolio because we didn't have those conversations, right? So to me, I'd rather take that extra 30 minutes and say, let's just push this off a few months. You know, and let's be honest, most business individuals are always extending their taxes also. They are. You know,
we don't know what's happening from 25 until like the end of 26. You know what I mean?
Exactly.
No,
and
I know.
There's so much that goes into it too.
No, it's absolutely right. I wanted to ask you, I have only done one reverse exchange, but or been involved with one reverse exchange. I didn't. Just as on the lending side. Can you walk us through that? What the difference is?
So a reverse exchange is when a client finds the property they would like to purchase first, right? The replacement property, but they have not sold their relinquished property, their original property. This specific seller refuses to take any contingencies. Like, this is a deal they cannot pass, right? Like, this is something they need to have right now. So there's something reverse exchange, right? Where we will assist them. And really what we do is we create an LLC and we call it parking. We'll park the property there and we hold it for you for 180 days. That gives you now the time frame to go ahead and sell your original property. And then we essentially move that, you know, like a normal 1031 exchange, a forward exchange, into purchasing this new one, and now you have your new property. So the reason being is, in the way this works is because technically the client has not taken title or ownership to this property. So they still are able to sell that original property and now move the funds over to this one. It gets tricky, mostly on the lending side, because not all lenders want to work with this or maybe understand it fully, right? So finding a lender, if you need those funds and you don't have your own funds or an investor, is the first thing I'll bring up, right? And I'll be honest, I talk people out of reverse exchanges every single day. Not only because it's a little bit difficult on the lending side, but the fee-wise. Fees are much different, and the biggest difference is the liability.
What are the fees? Just
so on average, anything $1 million to about $5 million is about $1,500. Okay.
For a regular
forward exchange.
Forward exchange.
A reverse exchange begins at $8,500. Begins. So they can still go up depending on the states, depending on timelines, or, you know, different things like that. So it really is a big difference in that, because we're holding that property. So we're liable for that property until you sell your original one, right? So it's a huge liability for a company to do that. So again, make sure you're working with a trusted, you know, company that can also assist with that. But if you have the funds, it's very easy to do, right? If you need a lender, that's the part where people really are like, oh, well, they told me, and it gets confused all the time with a reverse mortgage. And I tell my everyone, like, no. Take a step back. Reverse exchange, reverse mortgage, night and day difference. But if you can find a lender, in which I have found some which are great, and they're willing to work with them, it can be very beneficial.
I've got a referral for myself, because we have a hard time with conventional financing doesn't allow. Either that, or you have to do something with the private lending side, you know, the hard money side. So
and it's you know, there's another option called build to suite, which is also called improvement exchanges. So, you know, a lot of my investors, so I work with investors quite often. They're always like, well, can I use some of these funds towards the property I'm building? It needs some work, you know, X, Y, and Z. Yes, you can, but all of your improvements to this property have to be done within 180 days. Permits, any architecture work, anything being done to the house. 180 days. So unless you have it in with the city, you're not getting a permit in under 6 months.
No, you're not.
So that means, you know, inside they're like, oh, can I do this and do what? I'm like, yes, but again, unless you have those connections.
Or it's unpermitted work, like you can just go ahead and do
it's still difficult. And again, the liability changes. So because we have to track, there's many different things. We have a specific team just for this, to help our clients track these things for tax purposes. Those begin at about $12,000.
Wow. Okay. So it's a big range.
It's a big range. So I tell clients, again, you know, my first question always is, what is your end goal? What are we trying to achieve? And I like to work backwards. Because it's much easier than them trying to say, well, you know, okay, what do we want to accomplish? Do we want to get multiple properties, diversify, or are we just really looking to get just to the next step? Great.
Yep.
Let's figure that out.
Yep.
And that's the easiest way that I've worked with my clients into getting those next steps.
I love it. That's so good. God, you covered everything. I had all these notes in here, but you're just so good.
I do this.
She's great
every day. It's so funny. It's my husband and my kids are just they walk around. My kids will mimic me all the time, and they have no idea what they're saying at all.
So they're talking 1031 exchange language at home.
Oh my gosh, it's so funny because my daughter, what did she say to me the other day? Because she'll hear me say qualified intermediary because people will be like, what's a QI? What's a QI? And I'm like, well, we're qualified intermediaries. And she walks to my son and she just goes, maybe you're a qualified intermediary. And I'm like, that's not a bad thing, babe. It's not a bad thing, but okay.
I love it so much. So we talked a minute ago, you've got 3 kids.
I do. I do. 3 little ones.
Yep,
so
3
my
little ones.
son just turned 6. My daughter is turning 5 in May, and then my baby is 1.5.
Oh my goodness. And you said your daughter's terrifying.
My daughter's gonna, yes. She is the one that, she already knows how to get what she wants. She's gonna do wonderful things, and it's gonna give me a lot of probably what I gave my mom during my teen years. I was gonna say
these things they do seem to work that way, right?
Yeah, I like I told you, there was a point I remember specifically when my mom and I became friends.
Yeah.
And then after I had a child, I remember calling her and being like, I'm so sorry.
Yeah, exactly.
I'm so sorry.
Yeah.
It was when my son first became a toddler. And it's just trying to understand and reason with a toddler that, as a parent, we go through so much in the morning. And it's funny, I'll get on my Zoom calls with our teams, throughout the country. And if it's before 8 a.m., I'm not ready.
No.
I'm probably still in a t-shirt. My hair's up. Like there's nothing because before 8 a.m. there's school drop-off lunches. Someone's mad at me. I don't know. Right.
Yeah. Exactly.
And they'll just laugh because there'll be all these chaos things or clients or they're, asking, what would you do, for advice? And I'm probably one of the calmest on these calls, they always say.
I love it.
And they're just like, what do you do? Do you meditate or do you go for a workout? And I'm like, no, I have 3 children and 2 toddlers that will tell you exactly what it is. There's no filter. So there's not much somebody could do before 8 a.m. to throw me off.
Yeah, I was going to say, this makes you the perfect person for this position because you don't get stressed. This high stakes stuff, you're not getting stressed out.
Oh, no. I mean, timeline portion of it or anything, I'm like, that's great. My daughter decided to plan a family Valentine's Day party and tell me, and I'm like, oh, we are? And she's like, yeah, I've already called everyone and invited them. I'm like, oh, thank you for that. Great.
That's perfect. You got a party planner in your hands.
Right. Oh, yeah. She's going to either be an amazing CEO or just completely do her own thing because she's very strong-minded.
She's going to be great. She's going to be great.
I know. I'm excited.
I love it. In just sort of bringing it all together here, because we talk about, protecting family time, and we talk a lot about that legacy, what it means, to be within what you're leaving within them. They see you working. How do you find the harmony and the amount of work hours that it takes for all of us whenever we're in this business, duty calls at odd hours, sometimes.
Anytime. Yes. They go with me.
Yeah.
So,
awesome.
I mean, Monday there was no school.
Yeah.
I forgot. So I was like, oh yeah, but they just did stuff with me. Yeah. Right. We're thankfully in this industry, unless I'm meeting with, attorneys and something like that, I wouldn't take them to that. Yeah. But thankfully in this industry, we've normalized working parents and especially working moms, right? We all understand that even when you go home, you have things to do. The job doesn't stop, right? Whether you're a mother or father, you still have things to do. Yep. So I've been very lucky that my clients, they love it. Yeah. My kids think that I go to, coffee and lunch and all these things for fun. And they're like, when you go in office, it's fun. I love what you do.
You're getting a break.
Yeah. I'm like, oh, this is great. And you know what? Honestly, let's be honest. Who doesn't, everyone would rather talk to my 4-year-old daughter than me most of the time. So I'm like, yeah, just run for it, girl. Go for it.
She's fun and funny.
But that's how I was raised. My mom, like I said, was in this industry, specifically title, for so many years. I helped her back in the day with all of her packets and her pop-by gifts and all these things that, they might still be around, but back, then I was her assistant. Yep. I did all those things. So I grew up seeing someone working consistently, and I understood because I saw the hustle and the drive that she had. And then when I got older and I wanted to understand more of where my family, really came from and all these things, it gave me that extra motivation, right? Because I've always loved to work, but now I'm working for something. Yeah. There's a difference, right? And especially after you have kids, and especially now with 1031, everything I do, we set up the college funds and all these things. But I told my husband, I think I was after our second, that, one of my goals is to have a property for each child.
Yes.
That they can rent, live in, sell, it's theirs, right? And they can choose to do so when they become of age or when they get out of college or whatever their path is, that they have something already that has developed money.
Yeah, and you know the time value of money. So like getting it started as soon as you can is the best strategy.
Right. And real estate in Arizona right now is gold.
Yeah.
Like no matter where it is, right? Because you have TSMC and all these data centers and all this money coming here, right? Like Mayo Clinic, there's just so much going on in the valley that we're lucky enough that we're not going to lose money on our real estate anytime soon.
Yeah.
Right.
We've gone through it and we're coming back up. Yeah.
Right. And 2026 is a breath of fresh air because, we all talk to clients the new year. And I think the last couple of years, everyone's been like, oh, let's hope it's better than last year, right?
Still not really gung-ho. This year feels different.
It feels different. Yeah. Clients are positive. They're excited, right? Things are moving. And it's been a nice change to the last couple of years after COVID because that wasn't the norm. Yeah. Right? The 2020-21 real estate market was not the norm here. No. It helped and it also hurt us.
Yeah, it hurt us. It pushed the value so fast and so hard, It was
just, and that's what people
the last few years
don't always understand because they're like, oh, the interest rates or the this or the that. And it's like, yeah, but you're asking the interest rates to fall, which will also hurt you if you kind of get some of the knowledge there. Yep. But yeah, no, that is my goal. And I'm going to also, and I told him because he's like, we'll just buy 3 condos. I'm like, no, I don't want just like, one's going to get land, one's going to get commercial and one's going to get residential and maybe multiple. Like down the road, we'll see how those go. But that's the whole point. It's like maybe residential does take a tank down the road. Great. We have land, which I have a client who's selling land a little more towards the west than here. Yeah. And it blew my mind. The price that I was like, really? She's like, yeah, it's just these large companies coming here. And west of Arizona doesn't have reservation land.
No, I know.
So it can keep going as far as you want. And with California staying California with prices, it's bridging that gap to make it easier for those that maybe need to commute, kind of like El Centro did with San Diego. Yeah. Right. So we're giving some of those options now. And it blew my mind to what she's getting
there's
for
a
that.
ton of opportunity right now. I've been saying 26 is going to be a fun year, and it's going to be fun to watch the investors come back into the market. I mean, the way they have, and I think, and people just be getting unhooked from that like 3%. I love to see people start their investment journey, so they're leaving their existing home as a primary, moving into the next thing as a primary, and now they've got a rental, and that's where then they call you for the next step.
And I tell people with that too, like, speak with a lender, right? They don't understand HELOCs or, how much equity do you have? What could you do with that, right? Like, yes, your interest rate may be super low, but there's a lot of institutions that will help you understand or find a next step because now you have funds. Leverage your equity. And if your property is rented, probably if you have a 3%, your property is being rented for more than you're paying. Yeah. Okay. That helps you get to the next one. So maybe you're buying 2 properties and you just thought you could, like, there's so many conversations to be had. Yeah. And that's what I keep trying to tell clients is just ask. Yeah. Right. Even if you don't know or you can't, but now you know how to. Yeah.
I love it. And I think knowing about these tools that's what's so key about having you come today and share with this, because I think to make wealth moves, you really have to know the tools that are available to you, to go from being one to being an owner of many and multiplying that wealth. You have to know the tools. And
tricks. I mean, and with our teams, we joke, the wealthy stay wealthy for a reason. We all give the wealthy crap for not paying taxes. There's a reason they've figured out how to work the system. Yeah. And it's just, we just don't have the understanding. I mean, there's tax breaks for residential homes that no one talks about.
Yep. Oh yeah, for sure. I was laughing because I was pulling, I always pull like a quote or two. I was like, and it's the Ben Franklin quote of, in this world, nothing can be certain except for death and taxes. And I was like, true, but I was laughing because I was like, true, but we can. Many people will push it off, and that's how they'll build wealth. And I think that's just pivotal to
I mean, America was always seen as you're gonna come make the American dream happen. Yeah. Right. That's what my uncles thought. Right. Yep. And they're in California, and thankfully very comfortably live in California, but that was what they worked their butt off for, was the American dream. How does the American dream happen? It doesn't just happen by buying one house and selling one house and going to the next one. Like you have to learn, or at least find someone that can do it for you or with you. And that's
just start.
All we teach.
Just start. Yeah, I agree. I love it. You were just a breath of fresh air. So great.
You.
Thank you for being here. I mean, man, that is going to be packed with so many tidbits of great information. Thank you so much, Jasmine, for sharing.
Of course. I appreciate you having me. It's fun. It sounds so weird. I enjoy what I do, but it's mostly because I get to educate.
Yeah. Well, you can hear it. And we're going to end up doing a class together. I already know that, because I could feel this one coming on. Jasmine is with Jasmine Dolan with First American Title. So happy to have her here as a guest today. So much great information on 1031 exchange and the strategy for building wealth with that tool. We are going to leave all her information and the contact information for her in the show notes below. Thank you again for being here.
Thank you.
See you next time.